Fintech by Syed Abdul Sami Abdul Rahim Syed Ali Haider, students of University of Central Punjab, Intro to Information Technology BS Business Analytics. What is fintech? Monetary innovation. Fintech is utilized to portray new technology that tries to improve and robotize the conveyance and utility of monetary administrations at its center. Fintech is used to assist organizations, entrepreneurs, and buyers with better deal with their monetary activities, cycles, and lives by using particular programming and calculations that are utilized on PCs and progressively cell phones. Fintech, the word is a blend of financial technology. When fintech arose in 21st century, the term was at first applied into innovation utilized at the back-end frameworks of laid-out monetary organizations, and then at that point, notwithstanding, there has been a shift to more customer situated administrations, and along these lines, a more buyer arranged definitions. Fintech currently incorporates the various areas and businesses, for example, training, retail banking, raising money, and charity and venture. The board to give some examples. Fintech additionally incorporates the turn of events and utilization of cryptographic forms of money, for example, Bitcoin. While that portion of fintech we see the most features, the enormous cash actually lies in the conventional worldwide financial industry and it's a multi-trillion dollar market capitalization. Understanding fintech comprehensively, the expression monetary innovation of financial technology can apply to any development in how individuals execute business, from the creation of advanced cash to full section accountings in the web website and the portal or web cell phone upheaval. In any case, monetary innovation has developed violently in fintech, which initially alluded to PC innovation applied to the administrative center of banks or exchanging firms, presently depicts an expensive assortment of mechanical intercessions or individuals and business finance presently portrays an assortment of money exercises. For example, cash moves storing a check with your cell phones, bypassing the bank office to apply for credit, fundraising for a business, a startup, or dealing with your ventures and by and large without the help of individuals. By EY 2017, FinTech Adoption Index, 33% of buyers use somewhere around at least two FinTech administrations, and those buyers are likewise progressively mindful of FinTech as a piece of their regular routine. Role of fintech in automation of businesses. There are five automation trades which might be impacting the fintech enterprise proper now: human resource management, mobile financing, customer support, billing, invoicing, accounting.
Pakistan. In Pakistan, banking sector is fast adopter of vintage and increasing its financial service rapidly. Effective realization of the vintage helps to save time, promote new products and serve and compete in international markets. The vintage has generated a various business models and customer requirement. It has a great impact on various aspects of the economics. For example, payment services, financial market, and banking sector. Many innovative electronic services has been introduced in market to fill the financial market gap. This new technology is easy to use, fast transaction speed, and wide choice of service provider. After the introduction of the PayPal, digital currency, etc., the financial sector has become the digitalized. According to the recent surveys, global vintage investment growth is assaulted in Asia and Europe in 2016. The global investment increased to $5.3 billion in first quarter of 2016, and approximately 62% investment is going to vintage. Companies in Europe and out of Pacific, however, the collaborative and the distributive vintage companies have different investment patterns. Same of the challenges while adopting vintage company, for example, IT security issues, adoption of business model, recognition matter, innovation, cultural, operational, IT skills, and complementary differences, and many other aspects. In Pakistan, banking sector is first adopter of vintage and developing its financial services rapidly. Effective utilization of vintage allows to keep time, promote new product and service, and compete in international market. Vintage consists of internet banking, mobiles, cloud banking, ATM, and massive overseas banking facilities relevant to technologies. Traditional vintage works together with financial issues group is capitally of their technology group with the useful resource or the use of the traditional pricing model. Whereas emergent vintage efforts back to the side of the art magnificence of the vintage as combined with the financial issues throughout the new engagement models. In Pakistan, the industries are not aware of vintage, and according to the report, 70% of the organization are not aware of the vintage in Pakistan. There are the number of challenges and obstacles to the development of the vintage. Now it is responsibility of the head of it to train brand employees or innovative vintage products. Vintage challenges and their solutions. The emerging fusion of the technology and banking has played a very important role in the development of the banking sector. Overall, fintech investments are accelerating dramatically, however, and the involvement of the fintech in the banking sector is well limited. The purpose of the study is to identify the importance of the fintech and understand the challenges and the barriers to adoption of the fintech in Pakistan. Many prominent fintech companies face issues like long fundraising cycles, missing out targets, and increasing losses. Well, these are the very common issues as well, and these take place due to misalignment of the login life cycle. However, there are many other key challenges that the fintech industry faces every day. Services, financial market, and banking sector. Many electronic services has been introduced in market to fill the financial market gap. This new technology is easy to use, fast transaction speed, and wide choice of service provider. After the introduction of the PayPal, digital currency, etc., the financial sector has become the digitalized. According to recent surveys, global fintech investment growth is assaulted in Asia and Europe in 2016. The global investment increased to $5.3 billion in first quarter of 2020. Data security has become one of the major concerns in the internet world, be it in mobile banking, payment apps, and or fintech in general. As we know, traditional banking system and content with the security guards, CCTVs, wallet, vaults, and heavy bulletproof doors to keep the data safe and secure. But when we talk about the virtual security, things are not as easy as we think. Volunteers are much more discreet and have potentially more impact on users, as not only the money is at stake but their personal data too. Solutions: you can establish a high-level security app with the help of the vintage app development company. The app may content of the following factors to make it more secure: two-factor authorization, biometric authorization, data encryption and objection, real-time alerts and notification, behavior analysis.
Compliance with government regulation finance is one of the most regulated sectors. There will always be interference from the government if you leverage traditional fintech software that does not use blockchain and other crucial technology solution. Before creating an application or utilizing the software, make sure to check it for legal compliance. Moreover, if needed, you can also hire legal consultant to lead you through all the basic details of policy before entering the market. Make sure your legal department is aware of the latest government policies again amendment. Lack of mobile and technical expertise in the finance industry. Some of the finance companies or banks
Compliance with government regulations, finance is one of the most regulated sectors. Solution is before creating an application or utilizing the software, make sure to check for legal compliance. Lack of technical expertise, which is number three. For that, we can use solutions such as QR code for payments in public transport, NFC chips in shop, automatic scanning of credit card number, length two-factor authentication with the fingerprint. This can be done using the full integration with the hardware of devices.
big data and AI integration. According to a 72% of US bankers and 79% of bankers globally believe that AI will revolutionize all the way banks fetch data and interact with customers. For that solution is that for AI and big data to combine, you will need to teach AI through machine learning.
While blockchain integration. Number six, user retention and user experience. Number seven, effective marketing tactics to acquire customers. Personalized services. Personalized services have been the primary and core factor of banking for a long time. Solution to overcome this challenge, fintech organizations should have precise customer insights. Conclusion. However, there are many challenges we face yet to overcome in this fintech industry. Regulations and various government policies are challenging for fintech companies. However, we should not always keep a balance between new technologies and compliance with the traditional linked system in order to disrupt the financial industry. Although it's not easy for traditional banking to adapt to new trends in technology, we can interpret that with time, mobile technologies will become more common in the financial sector as they are impactful and convenient for people, helping banks work more efficiently.
We hope you enjoyed and liked the video so much. Thank you so much for your time. This was an informative and highly knowledgeable video. Thank you, everyone. Thank you, our audience.